Hey there, it's Dave Keller with Market Misbehavior. Today we're going to look at the S&P 500 index and consider 4 different potential future paths over the next 6 to 8 weeks. Which one do you see as most likely and why? So I like to occasionally do what we call a choose your own adventure style video. We take a particular chart like the S&P 500, we think about some different potential paths that market could take. Now, while some of them are more probable than others, all 4 of them are certainly possible. And the benefit of this sort of probabilistic analysis is it forces you to disconnect from maybe your preconceived narratives, your confirmation bias, right, your predetermined bias in the markets, and just focus on possibilities. What would the market look like in a very bullish scenario over the next 6 weeks? What would the very bearish scenario look like over the next 6 weeks? What stocks or assets or ETFs or sectors would thrive or struggle in each of those different scenarios? By thinking about the possibilities and starting to assign probabilities, we can position ourselves for the most likely scenario, but also be prepared for any of the other scenarios as well. So today, let's look at each of those 4 scenarios. I'll describe to you what it is, how it might look, and have you think about which you think is most likely and why. Before we get to the charts, by the way, if you like the sort of thinking about investor decision making and technical analysis, I hope you'll subscribe to my channel. Also, give the video a like if you appreciate it. We'd very much appreciate that back. Don't forget to vote in the comments below. Which of these 4 do you see as most likely and why? Let's get to the chart here. This is my daily chart of the S&P 500. Pretty busy chart. So I have a lot of lines on here. And as we've gone through sort of this, what I would probably loosely describe as a consolidation phase over the last 10 months, or maybe a bottoming process, we've sort of drawn a lot of different trend lines in Fibonacci levels, support and resistance levels, just to kind of key in on important levels that I think are worth paying attention to. Just to orient ourselves to the chart, we're looking at the last 12 months, actually a little bit further. We're going back to the beginning of 2022, so we can get the January 2022 high in the chart. You see the downtrend, the new low in June of last year, the eventual new low for now in October of last year, then a higher low in December and a retest of that low in March. You can see on the upper end, 4,100 is the level here from late November, early December. That's the top of that blue shaded area. We retested that in early February, traded above it, but then came back below. And at this point, we're sort of still within that range between 3,800 on the lower end and 4,100 to 4,200 on the upper end. Those levels may come in when we talk about our 4 different scenarios. So when I think about sort of the different future paths, here's what we do. First, think of like a really bullish scenario. What is a really optimistic version of what the next 6 to 8 weeks could involve? And think about what that path might look like, and then again think about what would be involved, what would happen, what stocks or securities or assets would do well in that scenario. Then we're going to do a very bearish scenario, and we'll do 2 in the middle as well. So first, scenario number 1, the very bullish scenario. This would involve obviously a continued rally. We've seen this rally phase in March, coming off the February peak. We retested 3,800. The market's rolled back to the upside over the last couple weeks, and it's been driven really by technology, things like semiconductors that have really led the market higher, right? As we've seen the market bounce, though, we're once again approaching previous resistance. So this very bullish scenario would have to involve a break through 4,100. I would say the very bullish scenario would also get above 4,200, even 4,300, which means we would make a new swing high and get above the August high. And I think the very bullish scenario would be a return back to sort of 4,500 plus. This would be that the rally that we've seen so far, again, think about what would be involved. If we continue to push that high, it would have to mean it's not just semiconductors doing well, and it's not just the rest of technology like Apple and Microsoft doing well. It would also have to be other growth-oriented parts of the market that probably start to perform pretty well. So things like communication services, consumer discretionary would have to thrive. But you'd also most likely see strength in cyclical areas of the market as well. Things like industrials, maybe even energy would do well. The defensive stuff that's been struggling, like real estate, things like financials that have been beaten down, just starting to turn higher at the end of March. They would really have to participate. For the market to get all the way up to that point, for the S&P to go up another 400 to 500 points over the next 6 to 8 weeks, that'd be another 10% rise. You'd have to see pretty much everything participate in that upswing. So the very bullish scenario would be all the weakness, the consolidation that we've seen over the last 6 months now alleviated. Buyers take control. We push the market to new highs. We don't stop at 4,300, but we keep going higher. So that very bullish scenario, I think, ends us in the 4,500 to 4,700 range would be my sort of best guess. Scenario number 2 is what we call the mildly bullish scenario. Maybe we continue to see some of that, right? The strength in semiconductors continues. Charts like Microsoft and Apple continue to do well, and even other parts of the market that we've talked about start to perform a little better as well. However, we still don't have enough momentum to get to the all-time highs, right? To push back to the levels that we were in early 2022, we stall out a little bit. And I think that mildly bullish scenario means we do get above 4,100 and maybe even 4,200, but we don't get above the August highs. I think the mildly bullish scenario 2 means we stall out somewhere in that 4,300, 4,350 range. That would be a retest of the August peak. Again, what could happen between now and then is you see continued strength in areas like technology. Maybe we see other areas of the market like industrials or materials continue to do well, but there's enough struggle in things like financials and other areas of the market that have been lagging that the weakness in those areas of the market prevents the market from going higher. This also could be more of a rotational sort of thing. So the growthy stuff that's been propelling the market higher in mid to late March starts to stall out a little bit. You see a recuperation from things like the MEI trade, materials, energy, and industrials. The problem is, while those sectors could do well, there's not enough market cap represented in those sectors, so the major averages don't see enough of a gain, even though those sectors do well. So you could see something like energy actually starts to rotate. Crude oil prices go higher. That pushes those areas of the market higher, but it's not enough of an upside catalyst for the S&P and the NASDAQ to move much further than 4,300 on the S&P. So that's the mildly bullish scenario, maybe more rotational. Now this gets us to scenario 3, the mildly bearish scenario. Now we need to think about potential downside. And for me, the 3,800 level is a really important one. If you look at where the S&P is right now, it's about the same level it was 1 week ago. It's also the same level it was 1 month ago, and 2 months ago, and 4 months ago, and even 10 months ago. We're all around about that same level, sort of S&P 40, 50 or so. So even though we've had all of these movements, all of this noise, all of these narratives that have happened over the last 10 months, the S&P is at the same exact place it was in May of 2022. I don't know if you realize that, but look at the chart and that shows you that that's the case. So the mildly bearish scenario, I would say, basically means a continuation of this choppy consolidation phase. Volatility most likely remains a little bit lower in this scenario. The rally that we've seen in things like technology and semiconductors maybe tapers off a little bit. We see a bit of a retrenchment as there's profit taking in charts like Nvidia, maybe Apple. Some of the other areas of the market, like cyclical areas of the market, may recover a little bit, but not enough. Maybe financials and real estate, which have been so beaten down, rally up a little bit, but it's a continued sort of rotational environment, and there's not enough of those leading names pushing the S&P higher to get above 4,100. So I would say the mildly bearish scenario, the S&P doesn't get much above current levels. We're currently around 4050 here on March 30th. Maybe we roll over a little bit, but I think the mildly bearish scenario, we don't get below 3,800 really, right? We continue to find support. We just have lost any upside movement. And if you think about it, that's what's really happened, right? In November of last year, in January of this year, and in March of this year, we've seen catalysts to the upside. We've seen upside momentum, but not enough to trade through resistance and power above S&P 4,100. So I would say the mildly bearish scenario basically means a continuation of the general pattern that we've seen over the last 4 months. This gets us to scenario number 4, the very bearish scenario. What would that look like? Well, I would say first off, the rally in technology would have to stop. Semiconductors would most likely stop going higher. You'd see a rotation in defensive areas of the market. Things like real estate, utilities, consumer staples would be an important one to watch there. Those would be the things that would probably do well if investors get nervous. Maybe this is additional financial concerns. Maybe other banks are brought into question, additional regulatory pressures, bring a big question mark to the stability of the market, and then uncertainty drives the market lower. Instead of bottoming out at 3,800, which is where we were a couple weeks ago, we're unable to hold that level. And once investors see that 3,800 doesn't hold, that's when we get a bit of a panic. We go down another maybe 8 to 10% below those levels. And I would say the very bearish scenario over the next 6 to 8 weeks takes the S&P back to retest the October 2022 lows around 3,500. Again, that's about 550 points below current levels. That's no small drop. That's about a 15% drop from current levels, but certainly possible, right? This would feel a lot like August, September of last year, which is when you had a bit of optimism, which is what it starts to feel like right about now in late March, but that optimism is unfounded. All of a sudden, we realize the market can indeed go back lower. All of a sudden, things that have been leading higher stall out. The buying power that has gotten us to this point is evaporated. Sellers start to come in and take profits. The downtrend begets further selling. All of a sudden, you have a feedback loop where more and more selling pushes the S&P lower. So that bearish scenario, I think, takes the S&P down to 3,500 over the next 6 to 8 weeks. And that would be, again, driven by an initial sell-off where 3,800 does not hold. And that is the trigger for additional selling and a lack of buyers that causes the market to go nowhere but lower. So those are the 4 potential scenarios. And here I have a chart just illustrating very simply what that might look like. Again, scenario 1, the very bullish scenario, would be a rally, not a straight line necessarily, but over the next 6 to 8 weeks, we break through 4,100, we continue through 42 and even 4,300. We end up in sort of that 45, 46, 4,700 range, which would be, in general, a retest of the highs from the first quarter of 2022. Scenario 2, the mildly bullish scenario, we break above 4,100, but we start to taper off a little bit. The leadership that's gotten us there, technology, semiconductors, those areas of the market, don't have enough additional momentum to push us above 4,300, and that's where the rally starts to taper off by the end of May. Number 3, the mildly bearish scenario would mean we don't get above 4,100. We actually retest the lows from December and from March. This would be basically a continuation of the choppy sideways period that we've seen. This consolidation phase we've been experiencing really since November of last year just perpetuates. And the rally phases stall out around 4,100. We sell off, but don't get much below 3,800. We continue to be range bound. Now, there could be individual stocks and themes that do very well and do poorly, but overall it nets out to the major benchmarks, not really making much headway in either direction. The very bearish scenario, scenario number 4, would be a retest of the October lows. That would take the S&P all the way down to around 35 to 3,600. That would be quite a haircut, 10% plus below current levels. That would mean we sell off to 3,800, but instead of holding there, as in scenario number 3, we break even further. And that breakdown is a real trigger for an additional wave of selling that causes further deterioration. Which of those 4 scenarios do you see as most likely and why? Give me a comment below. Let me know which one you see as most likely and why. Which of those scenarios concerns you the most? Which do you think is most unlikely and why? Let me know as well. By the way, this sort of probabilistic analysis is meant to spur your thinking, to break away from your preconceived notions of bullishness or bearishness, to think about possibilities. What are the different paths that the S&P or any other chart could take? Think about what those possibilities would look like, what those future paths would involve in terms of leadership and what would work and what may not work in those scenarios. And think about how you would manage your portfolio in each of those different scenarios. For Market Misbehavior, I'm Dave Keller. Be well and stay safe. I'll talk to you again soon.